Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. Stronger than expected manufacturing data, a Greek austerity package, and the stock market turns in another good quarter. That's what's on the docket for this edition of the Roundtable, with our editor-at-large Steve Reitmeister, research director Shiraz Mian, and market technologist, technologist.
I'm a scientist.
Kevin Matris.
I'm a scientist.
It's the same thing, right? All around good guy. That's the main thing.
I like that.
Steve, I'm going to start with you. We did get some unexpectedly good news in the ISM report on a national level, good news on the Chicago level as well. So does this mean that we're going to take this as a sign of optimism on the economy going forward?
Well, here again, it's all a matter of perspective. If we came out with that 55 a couple months ago, the market would have gone down. But after a month or two of softer data, expectations get lowered. That 55 looks terrific. Okay, it's much better. What did we have last time? 53, and the expectation was 51.
Yeah. 53.
So all a matter of expectations, and this certainly topped that. In particular, there was some strength in the employment component of this, and certainly we want to know that coming into next week, which is going to be all about employment. So, versus expectations, that was a good showing.
Yeah, Shiraz, is this another sign, another strengthening of the case for a second half recovery, you think?
Absolutely it is. I was myself getting more skeptical of this second half recovery narrative because all the data was so consistently bad. And I was very happy with what we saw in the Chicago PMI and then today in the national numbers. In fact, the national PMIs across the board, across the world, were weak the last few days. We had it in China, South Korea, Japan, Germany, France, the UK. The US is the only positive uplifting ISM number, and that ahead of the July 4th probably says something.
That alone is enough to celebrate this 4th
That's right.
of July weekend,
Exactly.
right? So, Kevin, looks like the Greek story was not the only thing to be happy about this
Right.
week.
Well, getting back to the ISM, I think the best part of that report was that they did note a bump in employment. So that is a good indicator for the long term. In regard to Greece, much has been said about Greece. The good news, though, is that it looks as if they have secured their bailout funding. That is fantastic. It doesn't remove the long-term problem, but it does remove the specter of a short-term default. Now the market has the ability of focusing on other things, which is the specter of a U.S. default, and they can start looking at global economic growth. But yes, getting this Greece thing and putting it behind us, very good for the market.
But Shiraz, we can't take our eyes off of Greece just yet, can we?
No, we can't. The Greece story is here with us. It is just everybody just trying to forget about the Greece story, and that's what the Europeans are basically trying to do by giving them some more money. But the story is not going away. The Greeks are expected to implement a ton of taxes, sell a bunch of assets, and remove a bunch of expenditures, and it's not going to happen. This is a socialist government. They have the unions behind them, and it's really tough to implement. I don't really see the Greeks being able to pay down the debt that they have without some measure of default, whatever they call it, reprofiling, restructuring, but there has to be a haircut. So the Greek story will come back in the coming months.
So the potential for that whole situation to impact our market is not off the table yet.
No, it's not. The Greek story and the related contagion that it carries brings down the other European countries, the European financial institutions, and as a result, us. And that's the key concern that's been weighing on the market in recent days. And the resolution of that was the sigh of relief that we were seeing in the market.
So, Steve, market's back up above 12,000, talking about the market. Turned in another good quarter, closed out this week. Are we going to see calmer stock markets, a calmer market going forward?
Well, let me address was the market good in the last quarter? Statistically, it was up just a little bit, but it was rough there in May and most of June. Okay, in most of June, and just in the last week we had this big run up. So I think there would be few people who said, "Boy, I really would love to have another quarter like this past one." I mean, that this was a painful one for most. It felt directionless and very volatile. So let's put that in perspective. So it might be statistically up a notch
Right.
It was not a fun quarter for anybody.
Okay.
But
Good point.
yeah, but from here, it depends on the nature of the economic data. So we had lowered expectations, okay, which brought the market down, and then against lowered expectations, we had decent numbers, and now we've spiked up. And now, let's just say we have medium expectations, okay? And so earnings, the jobs numbers and things like that going forward, that's going to very much set the paces for what we're going to see for the next leg of this market. If it's better, we could certainly hit the past highs, if not to extend beyond them. You know, a Dow 12,800, not that far away from here. And if the numbers are medium, then we're going to just stall out in a trading range. The numbers a week, we're right back to 11,800 on the Dow, like that.
All in all, though, going forward, the market's going to track the news headlines pretty closely?
Not just the actual data, okay? And here again, but it's also versus their other options. So the numbers can be mediocre, but where are you going to put your money in cash? I mean, well, that's paying nothing, right? And so the numbers can be mediocre, and we still do fine. If there's the hint, the two main indicators get close to break even or showing any signs of negative, we're right back down where we were 2-3 weeks ago.
All right, Shiraz, give me your top stock pick.
It's the Canadian equivalent of what we have in AT&T here in the States. It's called TELUS Corp. It is not a flashy growth story with glamorous expansion projects of that nature. It's a steady-as-you-go company with a ton of cash flow, and they don't hesitate to share their cash with their shareholders. It pays a very juicy dividend north of 4%.
All right, Kevin.
Mine is Frontier Oil, ticker FTO. They are in the oil refining and marketing industry. I really like the refiners right now. The one thing that I like about Frontier is that they have the ability of refining the heavier, lower quality crude, and they can still turn that into a lot of the higher margin products. One thing that should be noted is that Frontier is merging with Holly Corp. So you're going to get almost, I think you're going to get 0.48 shares of Holly for every 1 share you get of FTO. But nonetheless, Holly looks great, Frontier looks great, CVI Energy looks great, all of the refineries look fantastic. And the thing that's interesting too is that with all of the SPR oil that's coming onto the world market because of what they did the other week, the refiners should be able to buy the oil at a cheaper price, which will increase their margin on their products. I like them all.
All right, Steve.
Thank you for leaving me no time, Kevin. Travelzoo. Internet player was all the way up to $103 before taking a big haircut in this last correction. Still got a long way to go. The shorts were ganged up on it, and now there's a short squeeze going on, and great earnings estimate story and growth. I'm loving it here.
Okay. Thank you all. Hope you all have a good 4th of July weekend, as for you as well. Hope the week ahead is a profitable one, and we'll be back next time around here at the Roundtable.